Hello, everyone, and welcome to this weekly market recap. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com. It's a pleasure to be with you again. First weekend of 2025. Happy New Year, everybody. Quite a start to the year here. I mean, maybe it doesn't look like a whole lot, but I'm seeing some key areas that are starting to show a little bit more. Um, I don't know, maybe just the chart's starting to look a little brighter. I've got probably several of them I want to go over, some various industry groups. I think that'll be some things to watch as we move further into 2025 to see if some of these key areas that I'm going to point out in the show today, whether or not they can continue to either bounce off support or make key breakouts. If they do, that's going to probably increase the likelihood that the S&P 500 is prepping to go back up to an all-time high. So a lot of good stuff that I want to go over today, but let's go ahead and take a look at the recap for this past week. I'm going to start off with the key indices. We've got the Russell 2000 leading the action, mid-cap stocks right behind, then transportation. So December, which typically we see leadership from value-oriented areas, dividend paying, and so forth. We didn't really see that in December 2024. We actually saw the reversal. We saw a lot of the Mag 7 stocks coming back and leading the market to the upside. Meanwhile, a couple of defensive value-oriented dividend-paying areas like real estate and utilities typically are leaders in the month of December. That's historically going back, I like to go back at least to the beginning of this secular bull market back in 2013. But even if you go back further, go back, throughout this century so far, those are areas that tend to lead in December, and they did not do it this year. So it's kind of weird as we started 2025 to see how this market was going to evolve. But so far, we are seeing some leadership back in that small cap area. Not a lot, but enough to at least maybe get me thinking that maybe we're getting ready to see a little bit more strength. But anyhow, here was the weekly results. So you can see the Russell 2000 finished up almost 1%, where the NASDAQ 100 right now is down or was down about 2/3 of 1%. So a little bit of relative strength there in that small caps. Moving on to the sectors. So again, this is looking back over the last week, and you can see energy in positive territory, gaining 3.4%. Utilities up 1.3%. Real estate couldn't do it in December, but starting to do it a little bit here in January, up 0.75%. Healthcare relatively flat, but those were the four leaders over the last week. The other seven sectors were down, led to the downside by material stocks, down 2.06%. Consumer discretionary down 1.68%. Big reason for that was the drop that we saw in Tesla. So came out with their annual deliveries, which were actually down. That was the first time that we've seen their annual deliveries down year over year. So that spooked a lot of traders and investors. I thought it was just an opportunity to get in if you're a fan of Tesla, because I do think that was news that was coming. It wasn't like that's an annual thing. It wasn't last week. It was for the entire year of 2024. Well, we already had 11 of the 12 months. So it really wasn't that big of a deal, but we had the big gap down. We saw a little bit of early selling. That was yesterday. So that was the first day of the year. But today was almost all buying in Tesla. So that cut into a lot of the losses that we saw in consumer discretionary over the course of the last week. But Tesla wasn't strong enough to bring it all the way back into positive territory. But that's a chart that we definitely do want to keep an eye on as we go forward. Tesla was able to manage to go all the way back up and close fractionally above its 20-day moving average today. So that certainly was a big lift for the discretionary group. Moving on, let's take a look at the S&P 500 chart. You can see this area of support between, I'm just going to say top of gap support and the bottom of gap support, which on the S&P 500 is just under 5,800. That's the bottom of gap support. And then the top of gap support is closer to about 5,860 or so. But we've seen three lows now coming into that area. We got a nice bounce on the S&P today. It was up 74 points, which took us all the way back up to 59.42, right about to the two moving averages. So I think there's going to be a big test here for the S&P Can we get back through both the 50 and the 20-day moving averages? That 50-day is sitting at 59.45 right now, and the 20-day is sitting at 59.64, and we closed at 59.42. So we're right up against both those moving averages. A break back up above would be a nice bullish sign. The NASDAQ 100, you can see here 21,326. We had a nice little pop bouncing off that hammer on the 50-day moving average from Thursday. Today closing at 21,326, which was 6 points below the 20-day EMA. So again, good day, up 350 points, 1.67%, but just beneath the 20-day moving average. I'd like to see us get through that as we start out next week. One key area that I wanted to focus on, actually, I just wrote an article about this earlier this afternoon at Stock Charts. So you can go over and check that out. But this is the regional banking ETF. And since the end of November, you can see this has not been a pretty chart at all. We've gone all the way back down and tested gap support from the election, the bottom of gap support. And I really like this hammer that printed. We went down slightly below the prior low and then reversed and closed on the high today. And you can see the volume actually started to pick back up a little bit. So I think that was a good sign. The reversal was a good sign. And so we'll just kind of see whether or not the regional banks can continue to build momentum off of today's reversal. Let's see, a couple other charts. First, let's go to the regional banking, the ETF, the KRE, and show that this hourly chart. So here's that double bottom that I was just talking about, where we went just slightly below the low that we saw back on December 20th. So a pretty interesting chart, double bottom on the hourly. If we can get back up and take out this 6150 area, when you have a double bottom, you really want to try to take out that high in between the two bottoms. And so that would be a really nice start to a possible reversal. I mean, we saw it on the daily chart, but I think if we get through on this hourly chart back through that 6150 area, I think that would just add a little bit more credibility to this reversal on the KRE. Now, one thing to keep in mind is regional banks and biotechs are the two largest areas of the IWM. Between the two, I'm not sure exactly what the percentage is now, but I want to say it's probably about 15 or 16% of the IWM. And the IWM is very widely diversified. So, I mean, we're talking about the Russell 2000s. We're talking about 2,000 smallest companies within the Russell 3000. So very, very diversified. So for two groups to have 15% of that IWM, it's pretty important. So the KRE, if it breaks back out, that's going to add to some of the strength that I'm going to be looking for in the small cap area. Now, if we look at the XBI, you'll see also not quite a double bottom, but pretty close. And we're trying to threaten that recent high up at about 93. So this would be another chart to watch if you're a fan of small caps, you're looking at the IWM, you're wondering what to make of all this. These are two key areas within the IWM that I think you should continue to watch. And then the IWM itself, you can see nice double bottom. There's that reaction high to 226. Had a nice day today, gaining $3.29, which was almost 1.5%. But we still got to get up and get through that 226 level. So if we can get through 226 and we get that push from both the KRE and the XBI, I think that could be what we need to kind of get things turned around. So 226 on the IWM on the daily chart. So if I can get that pulled up here. There we go. So look at the 20-day moving average, which right now is at 226.41. So what we're seeing on the hourly chart and what we're seeing on those other ETFs, the XBI and the KRE, if we get those breakouts and that leads to an IWM breakout, that could also lead to, well, let me annotate this because I think it's pretty important. But right here at 226, notice tops at the end of July, top in October. We gapped up with the election above it. We came back down. We held 226, went back up, false breakout, and then we fell below the 226 level. And now here we are talking about 226 again. If we get back through it, to me, this is a really key area where we have pivoted on multiple occasions. So I think getting back through that level would really add some bullishness to the small cap area. So that's something I would definitely be watching for. So again, KRE, XBI, that's your regional banks, that's your biotechs. Both of those, if they start to show further characteristics of a reversal, and that bleeds over into the IWM and we get the breakout above 226 or 226.40, that would be a nice signal for me on the IWM. All right, tomorrow morning, you're running out of time. We are going to have our 6th Market Vision event. This is Market Vision 2025. This is where I lay out what I think is going to transpire in 2025. The last 5 years, I'm 5 for 5. 4 years, I thought the market was going up. 4 years, it went up. The 1 year I thought it was going down, 2022, we had a cyclical bear market. I got a lot to talk about Market Vision 2025 tomorrow. It all starts at 10 a.m. Eastern. I've got Dave Keller from Alpha Sierra Research, who's a colleague of mine. We do a lot of work over at Stock Charts together. He's going to be joining us. He's going to give you his take on different scenarios as we open 2025, where he thinks things could be heading. I'm going to give you just a really detailed presentation. Again, I do this once a year where I go over just about everything that you can imagine. I'm going to be looking at obviously the major indices, the sectors, the industry groups. I'm going to be looking at transports. I'll be looking at the dollar, interest rates, inflation. I'm going to give you an update on all these various areas. It'll be probably one of the best recaps and analysis going forward that you're probably going to see in 2025. So I really hope that you will join us. So if you click on that, it will take you over to this landing page where you can learn more about it. But I want to point out that if you end up signing up for this event, which I believe is $797, we're going to give you an annual membership with that registration. Our annual membership, if you pay monthly, is like $1,700. And if you even our annual membership that we offer at $997, that's $1,000 you're going to get for free. You're going to have our membership for the entire year of 2025 just by attending this event. So don't mess around. We want to have you here. If you can't make it live, no worries. We're recording the event, so you can always go back and look at it at your leisure later. But don't miss this opportunity. Putting together this membership with the event, I think is powerful. I'll do my best to have your back for the next year in the market, giving you opportunities and ideas throughout the year. But again, it all starts with Market Vision 2025 tomorrow morning, 10 a.m. Eastern, the year of diverging returns. And I'll talk about that more in the session. If you are on a mobile device, we got a QR code for you. All you have to do is scan that QR code. It'll take you to the landing page and you can sign up using your mobile device. So we try to make it as easy as possible to sign up. All right, let's look at some other areas. And I'll be talking about some of these, by the way, tomorrow as well. But we just talked about the KRE, which is the regional bank. Here is maybe a more inclusive bank index. This is the Dow Jones US Banks Index. And you can see a nice little hammer that printed here. The hammer really doesn't make much difference to me at this point because it's more in the middle of the chart instead of off of a downtrend. But still a nice reversal today. We've gone back down into this gap support area, but starting to turn back up. This is an area I definitely want to keep an eye on as we move throughout 2025. Semiconductors. Hopefully, if you've been following my show, what happens when we get breakouts from semiconductors. Market usually explodes. Semiconductors represent, I believe, 25% of the NASDAQ 100. So when the NASDAQ 100 gets a breakout from this group, it normally helps the NASDAQ 100 to lead or at least to perform extremely well. So watch 21,000 on the Dow Jones US Semiconductor Index. That's $DJUSSC. If we get a breakout, and by the way, look at this AD line. The AD line continues to strengthen. So as far as I'm concerned, it looks to me like Wall Street's accumulating this group. We had a beautiful day today, moving back up to one of the highest levels we've seen over the last several months. If we can close above 21,000, that would be extremely bullish and likely lead to a lot more gains in this area. Software stocks. What I really like about software, I'm going to annotate this one as well. I think this is pretty important because we've come back down after breaking out. We've come back down to a pretty good support area. So here was the breakout. We went just a little bit below and marked this low right here. So I'm kind of watching these two levels and look at where we were on Thursday. First of all, we went down below this prior support, but we held into the close and then came back strongly today with the group up 97 points. That's 1.34%. If software gets going, semiconductors break out, this is going to be a 1-2 punch that will be undeniable as far as the NASDAQ 100 goes. That would be a massive 1-2 punch if we get the breakout on semis and we get a continuing reversal off of support on the software group. And the opposite, obviously, would be bearish for the NASDAQ 100. If the SOX again fails, or if the semiconductor group fails at 21,000, starts to roll back over again, and software breaks this area of support, that would be the opposite. It would have the opposite impact on the NDX. So these two charts are going to be really important as we go forward. Home construction. Interesting part here is home construction is just completely falling apart as the 10-year Treasury yield's been going up. That means mortgage rates are going up. The economy already, is not exactly the strongest. So all this combination has a lot of folks selling home construction stocks. But I want you to look, we're down at a pretty key area of support. And if we go out to the weekly chart here, you will see that this area right at about the 2290, 2300 level, pretty important. And so we finished at 2356, and this is down from 3200. So we've come back a lot. A lot of these home building stocks, home construction stocks are a lot cheaper than they were not too long ago. So keep in mind this group. If we get a bounce, and believe it or not, I know, we're getting a huge burst of cold weather coming down from Canada throughout much of the United States next week. But what I can tell you, and it kind of seems weird that maybe you'd be thinking about home construction stocks when we're going through a lot of colder weather in the northeast. But what I can tell you is that historically, the home construction group loves the months of December, January, and February. December was not good, but now that we're near support, we might see that group bounce back because, again, January and February tend to be strong for home construction stocks, home builders, and so forth. So watch this group. Next group, railroads. Railroads, for me, transportation means a lot. When those stocks are going up, it means only one thing. Two things, I guess. I shouldn't say either if I say it's one thing. Two things. It means either that the economy is strong or that it is strengthening. That's the only reason why you would buy transportation stocks, because improving economic conditions, strengthening economic conditions will result in more shipments of goods. And that's transports. So anyhow, I'm watching this to see if we can get back through the 20-day. This tends to go, railroads, transportation tends to go a lot of times with the small caps. And so watching a level like the 20-day moving average for the railroads would be another signal, kind of like the XBI and the KRE. Not as much of a direct effect, but I still think there's an effect or an impact if we start to see the transports doing better. Air delivery. This is interesting. I didn't annotate this. Maybe I'll annotate it right now. But if you look, we have seen a couple of things on this group. When we get our PPO in negative territory, right down at these two levels, look at what has happened in the past. So I'm going to just circle these. So here we get down to a low, and look at this. Where did we go? Up. Here we get down to this level. And we came in with a double bottom that went a little bit lower and then reversed in a hammer. So look at that pattern right there. What happened off of that? We went up. We come over here. Again, that weak PPO right at this area. What happens afterwards? We go up And now here we are again with actually a positive divergence, or at least the start of what could be a positive divergence here. And here we are. So, when I think air delivery, I think, or excuse me, delivery services. When I think delivery services, I think FedEx, UPS. Those are the two big companies in this area. They haven't been doing well, but based on what I'm showing you here, I wouldn't be surprised. Watch for a breakout on this index at about 1260. If we get that, I think we could see a nice pop in both FedEx and UPS. So just one more thing to watch as we go forward. All right, some individual stocks I wanted to give you. I thought Chewy looked pretty interesting today, CHWY. It actually broke out above this prior high. AD line starting to turn higher. If there's one thing that makes maybe I have a little concern with, or it makes me hesitate a little bit here with Chewy, is that the AD line has been mostly sideways. But I think with this breakout, we might see that AD line continuing to improve. If that breaks out along with price, I think that could be a catalyst that really could start to see CHWY take off here. I mentioned semiconductors, and you better be prepared if semiconductors are getting ready to break out, or if you like that group, you want to start looking for leaders that are being accumulated. In my opinion, those are the types of stocks that I would be looking at, or at least watching as we get close to a breakout. Because if we break out, I would expect those leaders to lead on this move to the upside. So Marvell, this is a big one. You can see the gap up with earnings a little over a month ago, or right around a month, or no, maybe that was, well, I don't know if that was earnings and, no, that was the earnings there. So went up with earnings, came down, tested the 20-day, starting to turn back up. I really liked the increase in volume the last 2 days as we came off this 20-day and started moving up. I would not be surprised to see a breakout. And after months of the AD line declining, we're now in an uptrend. So I think this is a stock that with semiconductors potentially breaking out, if they do make that breakout, watch Marvell. Semtech, SMTC, this is another one. Look at that AD line. Beautiful. Big move up. We've been kind of sideways consolidating here in a flag. If we get that breakout above 70, I think SMTC is another one that you would be looking for possible leadership. SITM, this is SI time. This was a small cap stock that I gave to folks probably back, I don't know, somewhere around this area, mid-November, I believe. We'd come back down off of a huge move up with, I believe that was earnings, heavy volume. Notice we pull back here and then we take off again. And now after coming down to a double bottom, we're starting to move again to the upside. I think this is one of those stocks that could be really hot in 2025, and it would be boosted if we can get a breakout in the semiconductor group as a whole. Last one I have is another semi, so I wanted to finish here with 4 semis. This one is probably more aggressive because it is only a $7 stock. But if you like these kinds of stocks, this stock moved from $5.20 to $9.75 over the course of 2 weeks. It did so on massive volume. Right here in one day, 650 to 975, 20 million shares that day, which absolutely just swamps all daily volume throughout the year. That was a massive day. We've now been coming back for about 3 weeks, back down. We got a double bottom in right at that 20-day moving average. I would not be surprised to see a little bit more strength coming into this stock soon. And even a move back up to test that recent high would be more than a 20% gain from where it is right now. So these are just some names to keep in mind. Again, HIMX, very, very aggressive. That's not for everybody. If you're somebody who's not at all interested in taking too many risks with your capital, stay away from HIMX. This is for those who like to maybe roll the dice a little bit, are willing to take on more risk because they're looking for much more return in a short period of time. That's the profile that HIMX fits. So anyhow, just want to give you a few of those. But it's been a crazy week. First couple of days of 2025. January tells us a lot about what we should expect in the stock market for the entire year of 2025. We get a lot of clues from what takes place in January. So I'm going to talk a little bit tomorrow at the Market Vision event, making sure that everyone's aware of some of the things that we need to be watching closely as we get started in 2025, because if certain things line up, we could see some really big returns in some areas of the market. And I'll be going over all of that tomorrow morning. So love for you to come over and sign up. Join us at Market Vision 2025. You can go over to earningsbeats.com and just click on the link to Market Vision 25. You can sign up. You'll get a free year membership with it. I don't know what else we can do. But come check us out. If you've been following me for the last couple years, I think you know I'm a pretty straight shooter. I tend to have pretty strong conviction. If I believe the market's going down, I'm going to tell you I think it's going down. If I believe it's going to go up, which it does most of the time, that's the history of the stock market. A lot of people always trying to find a top in the market. I'm generally always trying to find a bottom because the market goes up more than it goes down. Anyway, come check it out tomorrow. I'd love to have you join us at Market Vision 2025. Have a great weekend, everybody, whether you make it or not. And we'll see you next weekend. Happy trading.